If you want to own the 500 biggest companies in America, you've probably seen the ticker VOO. It's the legendary Vanguard S&P 500 ETFs, and for many investors, it's the only fund they'll ever need. It gives you a piece of everything, from Apple and Microsoft to Amazon and Nvidia, all for a fee so low it's practically free. But for Canadians, of course, there is a catch. Since VOO trades in the US dollars on the New York Stock Exchange, buying it from Canada isn't as simple as clicking buy on a Canadian stock. You have to deal with the currency conversion and a specific tax rule that could actually save you thousands of dollars if you play it right. Today, we're looking for what's inside the fund, how it compares to its Canadian cousin VFV, and how to buy it without getting crushed by the fees. So without further ado, let's get right into it. At its heart, VOO is a total market powerhouse that tracks the S&P 500 index. When you buy one share, you're instantly becoming a very tiny owner of 500 largest, most successful companies in the US. Because it's a Vanguard fund, it's designed to be as efficient as possible. The expense ratio is a tiny 0.03%, which means that for every $10,000 you invest, Vanguard actually only takes $3 a year to manage it for you. The share price is listed in US dollars, so the value of your investment doesn't just move with the stock market. It also moves with the exchange rate. If the US dollar gets stronger compared to the Canadian dollar, your investment becomes worth more in Canadian dollar terms. It's a favorite for buy and hold investors who want the lowest possible costs and aren't afraid of a little bit of currency fluctuation, which will happen. For most Canadians, the big debate here is VOO versus VFV, and actually I have a video on that specific topic. And here's the deal. VFV is a Canadian version of the fund. It holds VOO inside of it, but you buy it in Canadian dollars. VFV is easier to buy because you don't have to convert your money to US dollars, but it has a slightly higher fee. The real magic, so to say, here happens when you put VOO into your RRSP. Because of a tax treaty between Canada and the US, if you hold a US listed fund like VOO in your RRSP, you don't actually have to pay the 15% withholding tax on the dividends. If you hold the VFV instead, that tax is automatically taken out before you ever see it. And, over 20 or 30 years, avoiding that tiny tax can add up to a massive amount of extra money in your retirement nest egg. When you look at the companies inside VOO, you're looking at the engines of the global economy. You see tech giants like Apple, Microsoft, and Google, which usually make up the largest chunk of the fund. It's not just a tech fund. It also owns massive stakes in healthcare, financials, and consumer brands like Coca-Cola and Disney. One thing to keep in mind is that VOO is market cap weight. And this means the bigger the company, the more of it you own. So if the top 5 tech companies have a huge year, VOO is going to soar. If they struggle, on the other hand, the fund will absolutely feel it. It's a simple, effective way to ensure you're always invested in the winners of the American economy, without having to guess which individual stock will be the next big thing. So, a lot of people ask, does VOO pay dividends? And the answer is yes, it absolutely pays dividends. It pays out a quarterly dividend, usually hitting your account in March, June, September, and December. Because it's a US fund, those dividends land in your brokerage account as US dollars. The yield usually hovers around 1.1 to 1.4%, and while that might not sound like a lot compared to a Canadian bank stock, for example, remember that you're getting that payout for 500 different companies. Plus, if you're using a broker that allows a US dollar account, you can keep those dividends in US cash and use them to buy even more shares of VOO without paying any conversion fees. I believe both Wealthsimple and Questrade offer that right now. So is VOO the right move for you? It really depends on which account you're using. I would say buy VOO if you're investing inside your RRSP and you're comfortable converting your money to US dollars. This is the most tax-efficient way for a Canadian to own the S&P 500. Then I would say buy VFV if you're investing in a TFSA or regular taxable account. The tax benefits of VOO don't really apply there, so you might as well save yourself the headache of currency conversion. And lastly, I would say avoid both if you want a more diversified global portfolio that includes not just the US but Canada, Europe, emerging markets, rather than betting on the 500 biggest US companies. Just to be more diversified. Anyways, guys, lastly, just a quick heads up, the video is for educational purposes only. I'm not a financial advisor, just a guy sharing what I found, my little research and opinions, so definitely do your own research before you invest. If you found this breakdown of S&P 500 and VOO helpful, hit the like button and subscribe to the channel. It actually helps the algorithm realize that people are getting value out of these videos. And that means the world to me. So once again, thank you for watching, and I'll see you in the next one. Take care.